Last time I told you my financial comeback story, today I'm going deeper. I'm going to tell you exactly how and why I did it, and how this strategy let me keep the best parts of my money. My journey into finance wasn't because I wanted a career, it was because I needed a way out of a financial hole. As a TCM doc, I saw patients with terminal and critical illnesses every day. I saw the courage they had. I also saw the aftermath. Families left with mountains of debt, having to set up GoFundMe accounts just to survive. As a father, buried under a mountain of student loan debt and child support, it hit me that if this could happen to my patients, it could also happen to my family. That's when I knew I had to find a different path. When I got into this industry, I was taught all the ways whole life insurance is sold. All the be your own bank talk. It sounded like the perfect solution for a father like me who felt like he had nothing. But something didn't sit right, so I started digging. And I found a tiny little phrase in the IRS code called 7702. It's the part that legally defines what a life insurance contract is. And it made me realize life insurance policy is designed to be life insurance, period. The cash value component is just there to ensure the policy remains a life insurance product. The key was to separate the two. I could get the best possible protection for my family and build real wealth separately, with complete clarity and without all the hidden fees and rules. This wasn't some magic product. It was a strategy rooted in deep understanding of the tax code. Here's the breakdown. I needed protection for my kids, and I found I could get $300,000 of term life insurance coverage for less than $90 a month. This wasn't the most expensive option. It was the most efficient. This policy also has living benefits, so if I ever became terminally, critically, or chronically ill, I could use a portion of the death benefit while I'm still alive. It gave me the peace of mind I needed without a single medical exam. The goal of my term policy is for me to outlive the 20-year term. My policy costs less than $90 a month. An additional $48 a month into a separate investment account for 20 years, assuming a 9% rate of return, that account will grow to over $31,000. That's enough to pay for the insurance. And so while I was building solid retirement fund, my life insurance was basically on track to becoming free. When a whole life policy pays out, the cash value often disappears into the company. By separating these things, I get to keep both. My kids get the $300,000 death benefit, and the money in my retirement account belongs to me. This allowed me to get the best of both worlds without compromise. My journey to becoming an investment advisor wasn't for a career, but to find the truth for myself and my family. And of course, here I am wanting to share that truth with others. If you're tired of being sold complicated products and you're ready to build a real plan for your family's future, let's have an honest conversation. My goal is to help you build the same financial freedom I've found, one step at a time. Before you go, let me answer two questions I get all the time. Is PRS a scam? No. PRS isn't a product. It's a transparent plan that uses two separate tools: an affordable life policy for protection and a tax-advantaged retirement account for growth. There's no fine print, just a clear, honest strategy. It happens in 10 years. My goal is to build a practice with 10 million in assets under management so I can be a full-time dad and a semi-retired investment advisor. The point isn't for me to work forever, but for me to have the time to help you enjoy the wealth we've built together. Your family's future starts with an honest conversation. Click the link in my bio. Peace.